Okay, on to E24. E24 states that the following transactions occurred, or the following events occurred for Fuvada Company, and they give you each one of them now, and what they want to know is what is the effect on the accounting equation here for each one of the events that occur. Whether or not we increase one account or another, so we have to show whether or not there's an increase or a decrease, and then we have to list out the specific type of account. I've listed out for you the accounting equation here, the balance sheet equation, in order to facilitate this problem here, okay? So let's go through each one of the transactions and make sure we understand what account is affected and why. And the first one is, received $10,000 cash from owners and issued stock to them. Okay, so we received $10,000 cash. Obviously, cash is going to increase. So we'll write cash here as the account, okay? And it's increasing. And notice that cash is an asset, right? And it says that we receive this cash by issuing stock, okay? Well, if we issue stock, we know that stock is part of stockholders' equity, i.e. the name, okay? And that's under contributed capital, and then obviously contributed capital is increasing. Notice because this side increases and this side increases, the accounting equation still balances. Let's go on to the next one. Number B, or letter B, says borrowed $7,000 cash from bank, sign a note due later this year. Well, again, we get cash, so we'll increase cash here. Remember, cash is an asset. It's an economic resource that we have. And we did it this time by signing a note that's due later this year, okay? Well, we signed a note that's due later this year, so that's going to be a liability. So we'll write notes payable in this instance, and that's also going to increase. Notice because each side is increased, okay, that their accounting equation still balances. If you want, you can write the amount that each side is increased as well. In this instance, they tell you that it was 10,000 here, so I'll put a 10 here, and that'll be 10,000 on this side here, okay? And then we got 7,000 cash here, so I'll put a 7 right there, and 7,000 is the notes payable amount as well, okay? So each side still balances. Let's go on to C. C says we bought and received 800 of equipment on account. So we buy equipment on account. Equipment is an asset. So again, we're increasing asset because we're buying something, so we're adding that, okay? So that's a plus, and it's 800 in this instance. And since I've kind of truncated the zeros here, I'm going to put 0.8. Okay, so plus 0.8 on the equipment. And then it says that we buy this equipment on account. If you see the phrase on account, they're talking about accounts payable. So in that instance, we'll go over to the liability. Remember, accounts payable is a liability. So we'll write AP. The AP is increasing, right? We're owing someone, so that's an increase to that account. One of the common misconceptions that I want to address real quickly is that individuals think that if something is on the right side of the equation, and this is just usually when they're starting out accounting and some things get confusing, they think that when things are on the right side of the equation, and because you have to increase the right side of the equation with a credit, that somehow this side of the equations, they're all a decrease, okay? Please don't get confused like that. I know that assets increase with a debit and decrease with a credit, but that does not mean because the right side of the equation increases with a credit that all of them are considered like decrease accounts. They're not, okay? In this instance, we are increasing accounts payable, so plus 0.8 because we bought equipment on account, okay? So we owe that. Next one is purchased land for $12,000, paid $1,000 cash, and signed a long-term note due for $11,000. So in this instance, we purchased land, so land's obviously increasing here. The total amount of the land was $12,000, so we'll increase $12,000 here, okay? But it says that we paid for this land in two different methods. One method was cash. Cash was paid, which means we decrease the cash account. When we talk about an account, think of it like a balance, okay? This is a balance of everything that's held in there. So cash is holding a balance. We're decreasing that by 1,000 because we pay for the land using cash, okay? And then the other method we use is 11,000 note. So a note is under the liability section. Again, we have a notes payable here, and that's 11,000 here, so we'll increase by 11 here. Notice that the accounting equation still balances. If you take 12 minus 1, you get 11, and then you have 11 over here as well. All right, the last one says that we purchased $3,000 of equipment and paid $1,000 cash and charged the rest on account. There's that phrase there, on account again. That means what? Means we're having an accounts payable. Okay, so we purchased $3,000 of equipment. So equipment goes up. So I'm going to write equipment here. Equipment goes up. Okay. Get that a little more even. $3,000. We paid $1,000 in cash. So just like we did last time here, we'll write cash minus $1,000, and then the remainder was on account. Well, that's not notes payable, that's accounts payable. So we'll go AP over here, again on the liability side here, okay? And that will increase by $2,000 here. Notice 3 minus 1 is 2, and 2 over here, so assets still equal liabilities plus stockholders' equity. Please let me know if you have any questions on E24.